Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. There we go. Got the charts up and running. Great to see you all. Time to caffeinate and dominate. So have some interesting moves going on in the markets this morning. One that has my attention is the move in gold right now. Non-trending market. So, whenever I've got a position on in a non-trending market, I'm usually not heavily position size. We know that we don't have the typical edge that we would. But yeah, kind of an unusual and somewhat disappointing move in gold. If there's anything that I'm kind of bummed about with this, although, if I've got to take a paper cut and move on, it's not personal. I will. But one thing I will say is I had a target about 20 cents above yesterday's high. And this area here at the point of control was really a pretty good midpoint. So if I'm going to go back and Monday morning quarterback my trades, which everybody should do, right? A lot of times we just dismiss a trade that didn't go exactly the way we wanted it to go. We kind of dismiss it to, oh, it's just something the market did. But we want to ask ourselves, is there anything we could have done better? Is there anything that we might have missed? And that's really going to be, as you continue on with your career, that's going to be the needle mover. Going back and really being tougher on yourself than the market could ever be on you. And, I think if anything, I probably should have moved that midpoint target either as an optional, but I probably should have used that midpoint target within the context of chop a little bit lower. We'll talk more about that in the mastery, but, this is the kind of thing that I do when I say, Rog, what could you have missed? You're always working to fine tune. So, with that being said, that one's got my attention this morning. But then, what are some of the other commodities that we've been in? Still looking at further upside potentially in crude. From a similar, the reason I'm showing you this, it's a similar pattern. It's a sideways market where we're looking for that upside follow through. But nowhere am I more pleased with energies than our now ongoing natural gas trade, which is at a 6x. And that's what makes trend following so interesting. You cut the trades off like a gold that isn't working for you. You take a smaller position size in a non-trending market, and then you really try to ride the trends like we have in natural gas as best you can. And those paper cuts really get diluted once those trends pick up. So let's go ahead and dive into some questions. Thanks as always for being here. All right, so hey there, James. Good morning. Good morning. Took a position in XLE. All right. As we took out the swing high. So good old 1, 2, 3. Would I look at 52.35 for a T1 since that's where the next volume ledge is? Well, we have another swing high at, call it 50.60, James, 50.60, 50.65. You can see the Darvis there. You can see the swing high from August 2. And then, yeah, I would say you're probably looking at about 52. So I'd step out in front of that handle. I'd step out in front of the likely size waiting there. I don't know that 52.35. I'd probably step out in front of 52. And I'd pay very careful attention to that 50.60, 50.65 area. But yeah, that 1, 2, 3. Let me get the drawing tool in here. That 1, 2, 3, 1, swing high, low, and notice that the Darvis is also, further confirming that swing high. Of course, remember the Darvis is automatically drawn. So yeah, nice stuff. And I think it also met our time criteria for ideally. Oh yeah, very nice, very nice, good stuff, James. So remember, don't be shocked that if this momentum breakout pulls back a little bit, maybe to the swing high, or even if, let's say we put in a high here, we don't go higher, but pull back, pull a 50% retracement from this low to this high, because this is really akin to, let's say that high sticks. This is really akin to a breach retreat where you may end up with one more little zigzag there before it keeps moving higher. And we've seen patterns like this before. So don't be surprised if we end up here with another opportunity to buy at the point of control. I mean, how awesome is that? Okay, so keep that in mind as far as the nuance of the pattern after it's broken. Good stuff. After it's confirmed, I should say, after the swing high is broken. Great stuff. All right, moving on. So yeah, Kevin, I covered gold a little bit there. So again, here's where I want to be as dispassionate as possible. Gold pre-market is going to be way the heck down here. So two things. One, we already know where our risk is sitting per contract. We also know that we're getting a gap. So there could be a fade on the gap, and it could be a greater loss than this. Remember what we paid for these options. GLD is a really inexpensive. I mean, it's a $3.95 option. So we've got roughly $1 at risk in terms of the plan. And I think on the gap open, it's going to be a little bit greater than $1. But I don't want to do anything in terms of my exit on the paper cut until 10 a.m. Eastern. Okay. So it's the same thing that when TLT gapped lower and it gapped through our entire entry zone, I said, hey, pause. Well, we've got a position on, unlike TLT, where we were using weakness to get the position. Here we have a position on, but I'm still going to wait till 10 a.m. And then at that point, if I'm below that 25% threshold, I'll take my medicine. And that's that with gold. Again, choppy markets should not be large positions. This is not as great as, say, a trending market that we'd be looking at. So thank you for the question. All right, moving on to, let's see. Chad says life is good. It is, Chad. Gosh, it so is. Yeah. All right. Yeah, I love that. What a great sentiment in the morning. Natural gas, says Michael. Yeah, Natty has been absolutely in fuego for our UNG calls. And we just keep trailing the stop up. Our most recent trailing is 1775. Now, mind you, this is after we've already scaled out of our position twice. We're down to the last quarter of our position, and now we're gonna scale again. I'll likely scale this thing up to about 1840 at the furthest. So we'll probably ratchet up to 1775 trailing, basically placing a safety net underneath this move. We've got the October 15, so there's still plenty of time here. So we'll just move that trailing up. And this, heck, I think we're on the precipice of a 7 or 8 times. I mean, it's just a monster trade for us. Let's leave it at that. And that is why we don't want to smother our trends. People say cut your winners, people say cut your losses, ride your winners. How the heck do you do that? And when is it more likely to happen? In trends, in the pullbacks, and in the continuation of established trends. Gold is not that kind of trade. Gold is not going to be position sized with quite the same interest for me as a trending market. So generally, if I've got an established yellow structure like we have in gold, I will generally be probably 50% of my typical position size. So whether that was the oversold level in the Russell that we took twice, that we set up with that low, or whether it's gold, it's going to generally be a smaller position size compared to the double green names, where I would look to scale in with my full budget. So yeah, Natty, good. Natty is crazy, Michael. It's fantastic. All right. Does witching tomorrow affect my trades today? Richard, great question. Of course, with a major economic volatility day, that options expiration. But Richard, I think of every Friday as a potential volatility event. Clearly when there's more, we've got futures expiring, we've got futures options expiring, we've got equity options expiring, we've got our triple witching. Quad doesn't really apply anymore, but yeah, it's the quad, the triple, whatever you want to call it. All the witches, right? All the witches. So we've got that much more intense. So it's not just any third Friday of the month. It's that major one that we get once a quarter. So With that being said, with our expirations coming up, absolutely. That's going to affect the way in which I'm going to presume there will be gravitational pull to certain high open interest strikes. There's going to be a lot more volatility. And so it affects my trades, not in that I won't take them, but part of the trading plan is just understanding that we're going to get thrown into the spin cycle of the washing machine tomorrow. And I personally, as a trader, have to be calibrated for that. My trade has to be calibrated for that. I just got to factor it into what I know I might have to tolerate going into tomorrow. And not every triple witching, quad witching is volatile, but we know there is the likelihood for it, right? So great question. All right. So do we have correlation in other parts of the market with gold? Well, when GC futures make a significant move, typically the first thing I'll look at is ZB. So if gold is moving lower, usually that means yields could be moving higher. Yields moving higher is something that the NAS is not going to love. So then I'll look at the NASDAQ. So yeah, the NAS is taking a little bit of a pause here, but not in a way that tells me there's some massive sell-off occurring, not in any way that suggests that the double green here is going to go yellow today. But I will keep an eye on sort of the connection. Great question of what does gold tell me? It's really not what does gold tell me. It's really more about what other markets will I then go look at. So from GC, I'll go to ZB. From ZB, I might look at TNX. From TNX, I'll go take a look at tech, right? And look, rather than TNX, you can go GC to ZN, the 10-year versus the 30-year. And then you can see that's moving lower too. Moving lower on the bond markets is higher yield, right? That's the inverse relationship. Lower price on the future is actually a higher yield. And who hates higher yields more than anybody? That's the NASDAQ, right? That's the NAS. That's tech. So then you follow that train of thought. You look at XLK, C, Y, SMH, CLOU, CIBR, and you see if maybe in some of those uptrends, this is an opportunity for a possible dip buy. I'm still buying dips, gang, because look, I think what's most important is to understand that through summer and easily since 13,008, remember we're at 15,004. I think those of you that are new to sort of adopting a trend follower's mindset, think about it this way. This trend has been giving us dips for hundreds upon hundreds of points. Is there going to come a time where we get that one last trend trade? Absolutely. But so many traders fear, so many would-be amazing trend followers fear the one last trend trade, that every dip gives, is more heart palpitations than an entry. And here's what I'll say. By not taking advantage of the dips, you're leaving this behind for fear of that, right? That's what I had to reconcile. I'm leaving the chunks of the trade behind for fear of this particular move. Makes no sense. There's going to be one last trend trade. The reason a lot of traders don't trend follow is at some point, a great trend is going to result in one last trend trade, which is a loss. But when you look at the size of the loss as opposed to the size of the trend, usually it's just giving back a little bit of profit when you were rolling with the trend to the market. That's it. But the other thing is when you need multiple confirmations and now you're looking at a very mature trend, yeah, there's a chance that it may not move higher with the same vigor that it did before. And there's a chance that by waiting and waiting and waiting, you're going to feel like, as soon as I buy the dip, the market rolls over. But how about looking at the lifespan of that trend and saying, did I miss the first, second, third, fourth opportunity? I got in at the fourth or fifth pullback. I was kind of arriving to the party late. And those are things that I had to sort of look within myself and say, all right, is this really the market finally dipping and then turning into a break? on me, right? Taking it so personally, or is this I just came to the party really late and everyone ate all the Doritos, that kind of thing. So, um, I think that the trend, and this is all stemming from the question about what does gold tell us about bonds? What does bonds potentially tell us about tech? That's the way my brain sort of connects the dots. Okay. All right. I got long, Garrison. Hey there. I got long swear on this pullback. Okay. So, Garrison, thank you for the question number one. What do I think of the structure? And what do I think? What do I see us making higher highs? And you have a great morning as well, Garrison. So let's remember that, is this really pullback? I know I'm going to get hung up on the verbiage here, but this is going to matter a lot. We can know precisely the day that we lost a trend. So August 18. August 18, whoosh, trend was gone. Doesn't mean that I don't have directional bias that's bullish. You can have bias and no trend, but every trend has bias. But you can break a trend, but still have the expectation of higher highs. So since the 18th of August, we haven't had a trend. So therefore, since the 18th of August, a dip or a pullback buy is no longer valid. And Garrison, if you haven't checked it out already, Monday and Tuesday's free video, you can check it out right here at the Simpler Trading YouTube channel. Monday and Tuesday's free video, I went into a lot of, especially on Monday, if I recall, I went into a lot of detail on, we throw out that buy the dip. It's sort of become a meme, it's sort of become a little bit of a funny thing to say, this little meme unto itself. However, there is a legit strategy that is a buy the dip. It's a retracement. And the word retracement or dip for me is only valid in a very specific underlying market behavior. And that's typically going to be a double green, right? A green over green on the JT multi, which means we have stacked exponential moving averages, 8, 13, 21, 34. 34, I separate from the other three because that lower row is what tells me about the trend. So there is no dip to be bought. However, having said that, you've got a really nice VWAP. This is a fade. You're still going to be bullish, because the trend that was up. We're still above the 200. Love that. And so this is a legit fade of the VWAP. See this VWAPs, kind of crisscrossing across our chart here. That is the first of the year anchored. So I use an anchored VWAP always, 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 always. And that's a pretty nice bounce. We've done it a few times before. So, that and getting above this point of control, I think you're okay because you still have directional bias on your side and you just bought basically an oversold chop. And the closer you can get to that VWAP, or even this point of control and volume ledge, the better. So what I would do now is I would cut the current range in half, right? High, just cut this in half. That ideally should be an optional or first target. Don't look for the market to traverse the other side of the range, but probably make a pit stop somewhere around the midpoint. Okay. So thank you for the question. Hey there, Mark. Thoughts on PWR? Going up nicely. Higher highs are not something that I can do anything with. But if you've been in the futures room or the options room, and I've talked about the 4-day box, this is where I believe your 4-day box probably gave you an opportunity in here. And then that's going to help you take advantage of smaller pullbacks within the context of clearly with Quanta, a parabolic market. All right. Is it too late to jump in on a natural gas trade? Steve, again, too late presumes I know where it's going to stop. I don't. Nobody does. That's for the geniuses on television to tell us, right? But I would say this, 4-day box, actually, Steve, 4-day box, because we need some sort, or 8 exponential. I don't have any 8 EMA prop dots. So the 8 exponential is not something that's valid for me now. 4-day box would be. and I'd apply that kind of process to something that's gone exponential. Or at very least, you want to see a single day's daily price movement range. So now we're using a volatility based level. You want to see a sell off so that you get some minor pullback to take advantage of to either buy UNG calls. But for me in my process, this has gone parabolic. There's no re-entry here for me personally, because the zone that I'm going to focus on primarily is that zone that we saw back between essentially August 12 and August 25. That's my bread and butter. Do we have an uptrend that preceded that pullback? Yes. Did that market consolidate, insinuating that we're likely to see potentially a momentum breakout? Yes. And then we're seeing the breakout happen. And the only thing I can do is find an aggressive way to get some sort of low to get long from. So I won't say yes because I don't know where the high ultimately is, but I'll say yes for me because I just haven't hit a level that would work for an entry. So thank you for the question, Steve. I'm sure you're not the only one asking that. I'm sure that is a thought a lot of folks are having. But remember, if you're looking at the structure of the market and you get a pullback like this, this is the gift that keeps on giving. This is my career, right? This is my 30-year career in a nutshell. This is actually now my biggest trade of 2021. Copper was, I think healthcare was a close second, and now natty gas has taken the mantle. So, it's those subtle pullbacks when no one's talking about the market, and even better, they're thinking it's about to roll over. That's where you swoop in and you scoop up inexpensive natty gas calls. All right. Okay. And just like that, I ran over. Sorry about that, gang. So I will see you all in tomorrow's Charts and Coffee. We will have yet another morning to caffeinate and dominate. Have a great morning. Yes, tomorrow's options expiration. Be aware of that, of course. Following week, we got Federal Reserve, so not going to be a dull September. I will see you all tomorrow. Be good to each other, gang. Until then.